In the video today, I want us to look at the simple principles, rules that an individual like you or me needs if they're looking for developing a long and consistent Forex trading strategy. So in the video today, we're going to develop our own Forex trading strategy, a step-by-step way. Now, the other thing that one has to be with in mind is that you should develop or you should use a Forex trading strategy that suits your personality. By this, it's the more it is, suitable to you, the more flexible and easy and stress-free it's going to be when you start trading, and the more profitable it will then be. So follow this Forex trading strategy, follow these Forex trading rules or steps that one needs if they are looking for developing their own Forex trading strategy. Without any wastage of time, if you haven't subscribed onto this channel, please do. Click onto the bell such that you're among those few people that are notified whenever we come out to release such content to you. You can also go onto other social platforms, Facebook, Instagram, TikTok, LinkedIn. Just look for FXKampala or type in FXKampala. Then once you affirm this is our platform, or this is our page, or this is our channel, then subscribe, like, follow those particular channels such that you'll be enjoying such content, or you'll be enjoying the same videos that as per you are viewing right now. Let's look at the steps that you should follow to develop your own Forex trading strategy. Number one, set your objectives very clear. Setting your objective very clear, by this I happen to mean you need to specify that your personality. In other words, you need to choose whether you are a scalper, a swing, a position, or an intraday trader. So by this, it's going to help you on making decisions when it comes to so many things here, or when it actually contributes a lot when we are developing our Forex trading strategy. After that, we need to set our profit target, that this is what I want, this is what I want by the end of the day, or usually this is what I want on a daily basis, this is what I want at the end of the month, this is what I want at the end of the year. Why? Because it's going to help you. It's going to help you a lot when it comes to decision making. And the reason as to why I'm insisting onto this, it's because trading, your Forex trading strategy, its contribution is made a lot on its suitability depending on your personality. By this, I mean choosing the strategy to use is mainly dependent of you as an individual, not as Isma, not as the rest of the Forex traders. So setting this or clearly defining this is key, is important. Then also define the risk per trade, the general risk on each and every. Let's assume the general risk for the entire period of time that you probably happen to look up to when you are trading. The other thing is that you have to pay attention to is to choose market and time frame. You need to choose the market and time frame. By market, I mean which currency pairs are you going to be trading. If you're a swing trader, I don't expect you, rather if you're a scalper, I don't expect you to trade more than one pairs. If probably you are an intraday trader, I don't expect you to choose more than two pairs. So all this has to be relevant to the style of trader you are. Two, you also need to be specific on the time frame. So having chosen the instruments, the currency pairs you're going to be trading, the next thing is to choose the time frame. The time frame should also be appropriate to the style of trader you are. If you are a scalper, I don't expect you to trade in bigger time frames. So first things first, we said define your goals. Two, make sure you choose the pairs that you're going to be trading. I hope you're trying to list each and everything that I'm discussing or I'm delivering right now to help you define, create your own Forex trading strategy. So three, I said look at the time frame. Which time frame are you going to trade? So if you're a scalper, I expect you to at least trade between 1 minute and 5 minutes. If you are an intraday trader, I expect you to choose time frame between 15 minutes and 30 minutes continuously and a lot more. Now, having looked at this, define your market analysis method. Okay, define your market analysis method. By this, you need to define whether you're going to be using technical analysis or whether you're going to use fundamental analysis or sentimental, or it is technical, mechanical, fundamental, or sentimental. So choose, but most people use technical. So if it's technical, do that. That is where we do the price action and a lot more. If it's mechanical, you know how mechanical goes, all. But the point is to choose or to define your market analysis method. Number 4, we need to define or to develop entry and exit rules. So what defines when should you enter, when should you exit a particular trade? So it is key, it's important, it's mandatory. Clarity here separates amateurs from pros. So it's important. This means that by the time you come to develop it, you have already defined your entry rules and your exit rules. For instance, if I see let's say three candles, or if I see a supply and I see an order block, then I should definitely buy or I should sell depending on the exit and the entry rules you have defined. So when you do that, no guesswork here. Rules must be mechanical or testable. So it is important that you follow each and everything. Having defined the entry rules and exit rules, risk management comes in. It's non-negotiable here. You have to define, this is per trade and also the general risk. You can say, me on every trade, I should risk 1%, 2%, or 3% of my capital. Or you can say, I shouldn't generally, maybe in a year or in a week, in a month or in a week, I shouldn't risk more than this. It is important that you follow. It's non-negotiable. It is important because it's what we need. Then backtest and forward test. Backtest on at least 100 trades. Okay, backtesting is going to help you to define the entry rules. Backtesting is going to efficiently help you to know the effectiveness and the perfection of your strategy that you're probably developing. You don't just, define the entry rules, time frame, and all that, and then you say, now this is it. You have to backtest it and forward test it. Keep your trading journal. A trading journal is just helping you know the reason as to why I made this loss was because of this. The reason as to why I made this trade was because of this. I told you in the beginning, there is not a particular structure that we should follow of a trading journal, of how it should be. However, there are specific things that at least should be in it and that should never miss. I believe I created a video still that help you define how you can have yourself a trading journal. Build discipline and emotional controls. No strategy works if your emotions control you. So make sure that you develop discipline and emotional controls. Okay, avoid revenge trading, such things. Avoid over trading. Sticking to your trading plan is also discipline, and a lot more. There is literally a lot more, because psychology in the market itself carries between 60 to 80%, meaning that if you don't abide by it, then definitely we expect you to lose and your strategy will fail to work out, and it ceases now as per the title to be a long, consistent forex trading strategy that we look for developing. Continuous refinement. Now, after developing this, don't just be like, I've developed it and this is it and this is what it's going to be forever. No, things don't work out that way. The markets are highly volatile, and by so there is a lot that keeps changing, and therefore, if you've developed your strategy, you've defined your rules, you've defined everything, always make sure that you redefine them, okay, to adjust such that it is appropriate as per to any, or adjust it as per to the market adjustments in it, such that you keep on the same pace and we keep continuing, to make profits and make observations as you also keep making more research on and on. Lastly, keep it simple. Don't worry. Just make trading simple. Okay, don't overload your charts with the complicated, things that, they are even complicated to you. Okay, by this, it will then be easier for you, simple, and of course profitable at the end of the day. So you just need to make trading as very simple as possible, and once you have these things in place, then it means that everyone can develop their own Forex trading strategy. These are simply the steps that you should follow, that you need if you ever wanted to develop a Forex trading strategy. Anyone can develop a Forex trading strategy only and only if they ever follow the rules, the principles, the procedures that I've discussed in the video. And I believe if there is any, we can always come back to let you know that you should follow. But most importantly, these are things that you need if you ever wanted to develop a Forex trading strategy. Thank you. With that, I would love to stop from here. Have a lovely day. Enjoy.